Several of the largest auto insurance companies have begun cutting their premiums. That's a huge benefit to all of us. Thank you, thank you, thank you, finally happening. This is the reversal of what we call the steep hikes from 2022 to 2024, 2025, and then finally switching in 2026. 5 of the top 10 insurance companies are expected to lower their rates in 2026 and then likely to follow through to the following years. This raises the biggest question is, if you're paying too much for insurance, why are these companies not giving you the best deal? And let's go over this. We're going to go over these companies, show some of the discounts that you're seeing and how you can capitalize on this. If you are shopping for car insurance, I'll put a link in the description below. Most of these companies you can shop with one agent. You don't have to take the time to call all of them and do all of those things. They can evaluate your situation, look at your profile, your insurance score, the cars, all of those things that make up the pricing. And then they throw it into a system that tells them who's got the best deal. That can help a lot if you are deciding to shop. I'll put that link in the description below. The first one is State Farm. They're the nationwide's largest insurance company, and they're trimming rates in a lot of states. They're actually coming down about 4% of a decrease. I'd like to see it higher, but we'll take what we can get. That renewal from 2026, according to a lot of the research, are finding that Florida and California and all these other states are seeing anywhere from a 10 to 20% discount accumulatively. Over time, we're going to see some of those approvals that they might be a 6% and they might be 10% in some of those major states that are paying twice to 3 times as much as most people. Progressive, we're seeing a decrease in most states across the board, about 6.6%, so a little bit larger of a decrease, and they're the #1 competitor to State Farm. I actually just recently did a video of State Farm versus Progressive, and we'll go over that, some of the reasons you'd want to lean towards one or the other, or I'll just link that video at the end so you guys can check it out. You're seeing about 270,000 policies that are being affected. That's about 3.2% cut across the mid-2025 ratio that we've seen in the past. What is causing all of these decreases? Partial is what we predicted previously, is they're going to increase a handful, which they needed to because they weren't making any money. Companies were going insolvent. You were watching companies' insurance go bankrupt, and they raised all the rates. All the things happened, and now the rates are good as far as don't do them again. And now they're seeing less claims and less frequency of accidents and less deaths. And because of that, we're seeing that the rates are starting to fall because now they're almost making as much or too much money to where they need to be regulated back down so that we don't pay extra in our policy. States like Florida, which I honestly was trying to avoid talking about, but you guys are going to see the biggest increase or decrease. You're seeing an average of 8% across the 2026 year with Progressive. And so you're going to see about $1 billion go back to policyholders. It might not seem like a lot to you, but when you look at all of the people they insure, that's such a big impact that they're able to give that back or at least reduce that cost for people that are looking for insurance. Geico is no slouch in this area. They're expanding into other states and they're allowing these independent agents. Like I said, the link in the description below is an independent agent. They're the ones that can shop. Now they can shop with Geico in a bunch of these states. And so states like Louisiana, you're seeing a huge decrease, 6.5%. You're seeing some states that aren't as big, you're going to see not quite 1%. It just depends on the risk that each carrier or company has. That's why that independent agent is so powerful. I'm not trying to push you there, but they have the ability to check who has the power in your state. Allstate is not going to have as big of an impact. You're going to see about a 4% across 13,000 drivers. That's not bad considering that Allstate has been the one that has raised the most rates and has stayed there. They did it early. They said, we're going to do it again. They did it again. they just had to make a profit, right? At the end of the day, they're not necessarily seen in the best light. Depending on the state that you're in, it could be a 7 to 8% decrease, but across the board, you're going to see about a 4% from Allstate. USAA is a pretty common talk about in this channel where they're starting to lose some of their customers, some of the service levels have gone down, but I think a lot of that's starting to fixed a little bit. They're seeing about a 7%. That's mainly in Florida. You're going to see that. You're going to see up to 15% in that state. So there's a ton of insurance companies that are doing this. Those were the examples I wanted to give you, but I wanted to show you states like Illinois. That's where you're going to see some of the biggest whiplash. Their rates are going so crazy there that they've increased. You're going to see a big relief. They've jumped from 18% in 2023 to 2024. And that's because there are more claims there. There have been a ton. You're going to see a 5 to 6% decrease as well. And you're not going to have those sharp increases because of the way that insurance has been hurt so much in the past. They've realized that there's other models and AI can help them determine more predictively of what's going to happen from year to year. So it's not likely that this is going to be another large impact that we're going to see going forward. I hate to say it, but Michigan is not going to see as big of an impact. You're not going to see the rates decrease a ton. We're going to see about a 12% increase on homes and on your auto. You've seen these companies go up. Now, that doesn't mean everybody. We've got some carriers that are doing a 2% decrease. If you're paying more than $300 a month, to me, that's a lot, then you're overpaying. If you're paying, some companies are over $150 a month. You should be looking at different options in the state of Michigan if that's the case. Be careful. A lot of agents in this state, in Michigan, are going to change your medical coverages. That's going to lower the price. They're going to change your limits that you can carry. There's all of these things that I've seen these agents start ripping your policy apart. Yes, it's cheaper, but at the end of the day, you're just buying an expensive piece of paper. If you want to be insured correctly, then you need to understand the rules of that specific state. I'll have that link in the description if you are shopping in Michigan, because it's a huge state. Illinois, Michigan, Ohio, Texas, Virginia, Indiana, Wisconsin, all of those major states that you're going to have, those agents are going to be very helpful. Another large impact, Texas and Arizona. Texas, we're working on it. It's coming. If you're close to the water line, you're going to have the biggest issue, because that's where all of the risk is. The closer to the major water bodies of water, then that has the higher risk. Some companies still don't insure homes there. There's a ton of companies joining the state. There are a lot of new companies saying, I want a piece of this business. But you got to be careful, because that's how companies went insolvent, and then nobody was covered at the end. Yes, the state picks up some of the bill, and there's protections, but it's still a headache. It's your problem at the end of the day. We've seen from 2020 to 2023 in states like Arizona and Texas, where you had as much of a 61% increase from 2020 to 2025. And that's these companies trying to survive. They're trying to make sure that they didn't go under, but you will start to see a decline. I don't even think you need a decline. I think some of the carriers have already adjusted their pricing so that you're going to see these way cheaper deals, but you got to start shopping. That's the unfortunate, is your local agent or your current agent, unless they're independent, usually can't get you that extra deal until you decide to look at something else. Mark, where are these big discounts that we're talking about? Tennessee is one of them, 17% from 2025 going into 2026. Florida is another massive one. You're looking at a 20% discount for a lot of these carriers from 2024. You've got Iowa, Arkansas, Utah, and Idaho. These are all states that have already had low policy rates, so the increase or decrease isn't as impactful. If they go down $100, that's not like Florida going down 100 or Michigan going down 100. That's a 2% in Michigan, where it's going to be an 18 to 25% in those other states. Bottom line, if your renewal premium is not down this year or hasn't seen a decrease of a minimum 5%, great if it's 10%, then typically among these companies that are actively cutting the rates in your state, you should see at least a 2 to 3% dip, or at least a flat renewal. That's one of the reasons some people aren't shopping as heavy, although the stats are saying everyone's still shopping heavy, because they're realizing that there's better deals at these other companies, that they can get those bigger discounts. That's what's happening in the market, where everyone's starting to shop, because the carriers, the companies, are trying to gather the customers and pull them back in the door. If you are also shopping, there's some discounts that you really should start focusing on. Think about telematics. That's one of the most talked about, the largest thing in insurance. Some people call them Snapshot. Other people call them the Drive Safe and Save. These are different companies that offer different names. They're essentially the same system with their own rules. If you are a good driver and you let them track your driving, watch your braking, watch your acceleration, all those pieces we talk about in other videos, I'll link some here that are helpful in a moment, but those are going to give you the 20 to 30% off whether you want to stay with your current insurance or not. That's going to be the biggest impact that you can have, apart from combining your home and your auto together under one policy. If you've had recent claims, some of these companies coming back in the door are no longer the 5-year companies. If you had to wait 5 5 years for a ticket or an accident to fall off. Some of these companies that are coming back are saying we'll only do 3 years. That way, if you have a ticket that's 3 or more years old, then you might be paying a surcharge here where you can get a better deal on the other end. Let's be honest, the reason the rates are dropping is profitability is good. Companies are making money, they're happy, they're throwing out vacations. They can only spend so much before the government really starts to dive in and say, hey, wait a minute, you can't rip people off. If that's the case, these bottom line companies are seeing a significant improvement in their financial footing. The other piece is all of these other companies that stood dormant during the whole issue of driving, the rate increases and all of those things. They're realizing that they're bleeding out and they got to get more customers in the door. And there's only one way to do it. Now they have to be competitive price-wise in order to get these customers back in the door. There is a ton of regulatory pressure happening. You are seeing some of these insurers that were forced to lower the rates, and you're seeing other companies that are wanting to lower them to get ahead of being forced to lower the rates. States like Illinois, you're seeing that. States like Florida, you're seeing that. States like Georgia, you're going to see more of an impact, even though I've seen the rates go up a little bit. You're going to see some of those rates start to level off. States like Louisiana are putting in some laws that insurance companies can't raise a certain amount, and overall, they're just having less claims. Thank you, everyone, for driving. If you watch this channel and it helped you at all, it's super awesome. And having less losses. Nationwide has less theft. Safeco is having less issues. A little bit more with their umbrellas, their legal liability claims, but most handful of people don't carry those. If you don't have those, you're not seeing as big of an impact. Less physical damage, less injuries, all of those things, the less weather-related claims, which is what spurred this whole mix of issues where there's not as many fires, there's not as many hurricanes, there's not as many tornadoes than we've had in the last 3 years. That's very beneficial. Thank you, weather, for not doing those issues. What does this mean for you? If you're stuck with me, please let me know in the comments below. I appreciate you watching the video. I hope this content is helpful and shareable. Definitely share it with somebody, but there's a couple things you should be aware of. Yes, you should shop around. If you are not seeing the impact, then you owe it yourself to look. There's the loyalty costs. I'll link up the discount video here that tells you all those things. If you're paying over $1,000 a year, that could be an indication. If it's one car, then you might be paying too much. My opinion, in the high risk states, if you're paying more than $250 to $300 a month, then for full coverage on 2 or more vehicles, then you're definitely paying too much. Ask about discount programs. When you do talk to your agent, or if you do the quote with one of the agents below, then make sure that you're asking about discounts. They should be asking and interviewing you as much to make sure that you're getting the best deals. You can stack a lot of these discounts. Those compound and get you better deals. Understand the market. Right now, the market's good. If you're the buyer, you're the shopper, you're the insured, the person driving the car, then there are a lot of trends that are beneficial for you. Leverage competition. You should be leveraging the competition, not constantly. There are the diehards. I shop every 6 months and every year and switch, so that's a headache to me. But you also are losing the loyalty discount, so you don't get that 3 years, 5 years discount that could get you 10, 20% off. Make sure that you're not undercutting your coverages to save a couple bucks, because that's not a discount. Anyone could do that. Your current agent could do that. And if that's the case, then you might as well just stick with what you have, but lower the coverage. I think what I'm trying to say is overall, don't let your agents or agency or 1-800 companies take advantage of you. If you've been with them for a few years and you've not noticed the impact, the lower impact of the rates, then you should be looking around, talk to your friend, talk to your buddy, fill out the description below. The next steps is to move forward. Like I said, there's discounts. I've got my discount 101 that's going to go really in depth. If you want that State Farm versus Progressive, I also got that video here. Let me know in the comments below if I missed anything, if there's any other discounts or anything that you're seeing in the trend. If your rate is going up or going down, I'd love to hear about it. I'm Mark with Think Insurance. I'll see you in the next one.